You are listening to ChartingWealth.com for Monday, the 13th of June, 2016. If you've not already listened to our weekly review and forecast, please make sure to do that after this one. We're going to jump in as to what happened on Friday, update you on what went on all three of our indexes in gold on both the 2-day and the half-day chart, and we're going to, again, encourage you to listen to that weekly review and forecast. What do we have happening? Well, Friday was a down day for the overall market, all three of our indexes. Up day for gold. Let's jump right into IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund that tracks the whole market. What do we see here? We see a breach of our 2-day trend line. We had a big down day, 1.08%. We had nice up movement all the way until then on the total market, starting all the way back on the 24th of May, and then we had a crossover on the 1st of June on our MACD, and we also saw derivative oscillator crossing about the same time. Nice green up candle movement, but a big turn down on the 2-day candle for the 10th. That is Friday. Again, the market, total market down 1.08%. Closed below our 2-day trend line. Derivative oscillator lost a fair bit of energy, getting close to crossing over, going down, but that has not occurred yet. We're still technically in an up move on the 2-day chart. Let's take a look at the half-day or 4-hour chart. What do we see going on? Well, we saw at the end of the day it pushed through our 2-day trend line, crossed over going down back on the 9th. We talked about that. And we've continued to see that spread widen or diverge between the MACD, the blue MACD, and the red signal line. Again, we have a crossover going down on the short chart, but we don't have a crossover going down yet on our big chart. Appear to be getting close to that, so let's continue to watch and see. Now, let's go from this chart to the S&P 500. It was down not as much as the total market, but down almost 1%, 0.95%. And of course, we have crossed. In fact, I'm going to show you how easy it is to draw a trend line. We had a trend line that has been breached. In fact, we draw that nice 2-day trend line. That is how easy, those of you watching on video, those of you just listening on audio, I will tell you, super, super easy to draw a trend line when you're using these great charts by the Warden Brothers, TC2000 and freestockcharts.com. Well, we breached that 2-day trend line. Don't yet have a crossover going down. Derivative oscillators losing energy on the 2-day chart. That is on the S&P 500 as represented by SPY. We can see that, in fact, crossed over going down in the morning and even more confirmation in the afternoon on Friday the 10th. And again, crossover on the MACD going down all the way back on the 9th. So we are, again, not a confirmed down move yet on the S&P 500, but appears to be approaching that. Again, it's the big chart that tells us once that crosses over going down, we'll call it a confirmed down move in the market. But we are not there yet. We will see what happens. Again, we let the charts lead us. Lastly, we're going to look at the Qs before we go to gold. What happened on the Qs? Well, the Qs, we had seen some weakening over the last couple of candles. The MACD started losing some of its energy, and we also saw primarily the derivative oscillator. We saw we had a spinning top as we closed out the prior candle on the 9th. That spinning top, of course, means indecision. We never had a good trend line connecting more than 2 candles. That was breached back on the 9th. So we had even more down movement, 1.13%. It was actually the most down movement of any of our 3 indexes was in the NASDAQ 100 or the Qs. So we don't yet have a confirmed down move. Derivative oscillator still positive. We don't have a crossover going down yet on the MACD and the signal line, but they are converging, that is coming together. Now let's look at the 4-hour chart, see what we see there. Well, of course, the MACD, as you all will recall, the MACD on the Qs crossed over going down on the 3rd, slid sideways for a while, and then rolled over under the 2-day trend line back on the 9th and has continued that steady march down. So let's see if indeed and when it is confirmed on the big chart. That's not happened yet. Wait for a rollback and see if we can get into a down play. Now, those of you who have not heard us talking about that, haven't been with us all that long, or don't recall, don't forget there are other charts. There are other ETFs that when the chart for, say, the Qs goes down, well, guess what you can do if you're a sophisticated trader? You can go to QID. Guess what it is? Well, it's the ProShares Ultra Short. It moves in the opposite direction of the NASDAQ 100. And what happens there is when it is going up, the market is going down. In fact, I'll plug into that chart and show you. Here it is. Look what happened over the course of the day. We actually saw the QID go up. Same with the S&P 500. There are other charts that actually move in the opposite direction of the S&P 500. So you can go find those types of charts all the time. They're all out there, and they offer you all sorts of opportunities to make money when the market goes up or down. That's how you start getting sophisticated in this, and we'll continue to talk about that and do training in that area. Now, lastly, we're going to go to gold and take a look at that. We start with the 2-day chart in gold. What do we see going on? Gold crossed over going up on the 2-day chart. It is official, happened over the course of Friday the 10th. Although that candle yet, well, we call it official. It's actually not quite official yet because that candle's not closed out. But again, we don't have a trade to make on gold until we have a confirmation with a pullback. If we look at what's going on the short 4-hour chart, we see that it is not pulling back yet. It is continuing to rise. So we'll wait for a pullback, wait for the MACD to roll over going down, or to have a pullback depending on how much risk you want to take, how much you're looking to trade. If we have a rollback on our candlesticks, our Hinken Ashi type candlesticks, you can sometimes find an entry point, as occurred in the afternoon on the 7th of June after 2 prior down candles when the chart started moving up again. Hopped in that afternoon, you would have done quite well. That candle opened at 118.59, and of course when gold closed out over the course of the day, it closed out at 121.98. And again, that is if we had a confirmation of a 2-day candle, which we don't have yet. So again, other ways to trade, other things to learn. That's what's so great about the market, my friends, is learning how to read these charts, developing your own trading techniques, practicing till you get perfect. Then you make up your own mind, you use your own money, and you trade for real when you are willing to take that kind of risk. And at the same time, you continue to practice, you continue to study, you continue to improve your methodologies and your ability to make money in the marketplace. We appreciate you being with us. We love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. If you appreciate what we do, by all means, subscribe at iTunes. Give us a 5-star rating. Say something nice about us. It helps us so much at iTunes with the metrics. And again, we appreciate you. Get the training at Charting Wealth. Sign up for the delivery of our daily podcast. And we just appreciate you and love to hear from you. Thank you so much for tuning in to chartingwealth.com.